You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back once again. It is Thursday. It is time for TWIFO, This Week in Futures Options. My name, of course, Mark Longo from theoptionsinsider.com. Reminding you of a couple of things here at the top of the show. A, if you're not listening to the full network, including the Futures Rundown, which airs every Wednesday on the network, and, of course, available on demand wherever finer podcasts are purveyed, then you're missing out. It is truly the sister show to this one. Quite a banger yesterday, the Fed decision going off while we were doing the show, so a lot going on. And as it happened, our subject that day was intraday swing trading for futures, so it worked out pretty well. Check out the Futures Rundown. Just listen to the full network wherever you're getting this. And of course, if you want to go above and beyond, you want to get awesome pro Q&As, you can pick the brains of anybody in the world of options and derivatives, as well as, of course, options oddities, some banger trades in there, including some fun ratio UVIX spreads. Only one place to go to get access to all that. theoptionsinsider.com/pro is the place to go as we see who's joining us on the old CME Group Hot Seat today. I am pleased to welcome back Brett Friedman, the managing partner over there at Winhall Risk Analytics. Brett, welcome back to TWIFO, sir.
Thanks for having me.
Well, it's been a little while since we chatted. Back since this summer, since June, that you joined us on TWIFO. You did make an appearance, though, on the new Futures show back in October. So a lot has gone on since then, Brett. So we have a lot to catch up on as we kick off the Movers and Shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers report.
All right, listeners, welcome to the Movers and Shakers report, where we break down everything lighting it up to the light side, aka the upside, and to the dark side over there at CME this week. And if you ran this report, you would think someone just put a bullet in the head of the markets and just took them all out this week. And maybe that's exactly what Powell did, because it is a whole sea of red. We could do a top 5, maybe a top 8, maybe a top 10 if we really stretched it, but that's really about it. It is a lot of red on the screen. But you know what? Brett, as our guest, you get the pride of place. You get to choose, sir. Where should we begin our journey in the movers and shakers this week? To the light side or to the dark side, sir?
Let's go light side first. Why not?
Yeah, not much of it. We can get it done pretty quick. Knock it out of the way. All right, to the light side we go, listeners. You can see this report for yourselves if you follow us on Twitter or if you follow CME. We both tweeted out ahead of the show if you want to see the full, not just the top and bottom 5, but everything lighting it up, red and green over there at CME over the course of the past week. Number 5, because it's a TWIFO show. It wouldn't be the same without Nat Gas showing up somewhere. This week it is number 5 to the light side, up 2.03%. It was number 1 in the same direction last week, up 13.15%. So a good couple of weeks, even though last week a little more explosive than this week, pun intended. Number 4, it is corn, up 2.08%. Number 3, it is lumber, up 2.27%. Number 1 in the other direction last week, listeners, off 4.58%. Number 2, our old pal, 3-month SOFR. If you're confused, what the hell is that? Check out the full episode we did with Carly Garner on the Futures Rundown, dovetailing and breaking down everything 3-month SOFR. It was a wild time. Number 2, 3-month SOFR, up 3.3%. And number 1 to the light side this week, our old pal oats, rearing its ugly head once again, up 6.56%. I say ugly because we'd love to sink our teeth into it, pun intended, but there really is no options volume there. So to the dark side we go, listeners. We're actually going to expand it. We'll do a bottom 6. We could obviously do a bottom 30 if we wanted to today. There's a lot of red on this chart today. I expanded it to 6 because I know Brett has something to say about several of these, including number 6, which is Bitcoin, giving back some of the tremendous upside it's had over the past month and change post-election. It's given up a paltry 1.84%. It's got a long way to go and more to give up before it even gets back, sniffs where it was before the election. So it's been quite the wild ride in crypto of late. Number 5, to the equities we go. Small caps taking it on the chin. Again, it's like someone took them out in the back alley and put a bullet in them. E-mini Russell 2000 off 5.7%. If that's not enough, number 4, listeners, it is the materials sector of the S&P off 5.9%. Number 3, from the equities and crypto to the metals we go. It is palladium, listeners, off 6.41%. It was number 5 in the other direction last week, up 2.77%. Number 2, back to the equities, in particular the energy sector of the S&P, getting annihilated this week, off 7.11%. It was number 4 in the same direction last week, off 2.86%. So a rough couple of weeks, closing in on 10% for the energy sector of the S&P. And if that's not enough, listeners, number 1 dark side mover and also our number 1 percentage mover at CME for the week. Back to the metals we go. It is silver, off 7.12%. You know, we were just speculating. Does all this action out here of late mean maybe on the upside in the equities and maybe a relative sense of calm outside of this week being restored to the markets? Does that maybe mean some of the bloom coming off the metals rose? We're just wondering about that. And here's silver taking it on the chin, off 7.12%. So I think we'll have more to say about the metals in a second, listeners. First, let me break down what's moving and shaking from a vol perspective. Remember, you can run these reports for yourselves. Just go to CME Group and CVOL, CVOL, into literally any browser on the planet. That'll get you to the dashboard here. Set the high-low range to 1 week. Then I like to choose a grouped list, but hey, you know, to each their own. At top of our list this week, we have the Treasury volatility, 99.68, up 3.22 points just today, and hanging out at the top of its range for the week. In fact, everything we're going to talk about, with the exception of one, is all pinning the needle to the upside for the week from a vol perspective. So vol popping this week. Again, if you look at that dark side chart, you could probably see why. Number 2 below, we have the energy CVOL, listener, 61.93, up 1.31 points just today. Also at its high for the week, the low was 56.60. Below it, we have the commodities aggregate CVOL, 36.07 right now. It's up 0.83 today. At its high for the week as well, the low 33.42. Below it, we have the aggregate ag product CVOL, 18.15, up a little over half a point, 0.56 just today. Again, at its high for the week, the low 16.14. 0.93. Below it, we have the Treasury price volatility now. Treasury yield vol was kicking it off. Treasury price vol now 5.74 for the Treasury price vol. That's up about 0.14 today. Also at its high for the week, the low was 5.43. And then below it, we have the FX CVOL 8.1, up about a 0.1 today or so. And that's also the high for the week, the low 7.65. And then bringing up the rear on our list, also the only loser and an aggressive one from a vol perspective this week is the aggregate metals CVOL, 15.5, off about a 0.1 today, and at the low for the week, the high was 16.66. So obviously, metals vol getting taken to the woodshed this week, and also the lone vol loser on our CVOL dashboard this week. So interesting stuff out there. And because metals is quite the outlier this week, I think we're going to start there first.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, listeners, time to sink our teeth into some metals, into some shiny stuff. Head on over to cmegroup.com/TWIFO, TWIFO. While you're there, go into that asset class drop down, go all the way pretty much to the bottom of the list to metals. And then at the top of it, precious metals. And then from there, where we hang our hats is going to be Brett's call. Brett, a little birdie told me you've been looking at the metals a lot lately. What's been catching your eye in the shiny stuff these days, sir?
Well, I mean, the action, the most recent action is not a great shock. I mean, the metals haven't really been doing all that much since the election. And volatility in the metals tends, at least currently, will tend to increase as metals come off. So that's essentially what's happening. What's interesting is, in the Bitcoin world, they keep on calling Bitcoin digital gold, which, be careful what you wish for, given what's been going on in the metals lately. So it's just to me, it's just an overdue correction, which might actually become something after a while. If you're hanging if you're buying metals because of geopolitical unrest, et cetera, et cetera, et cetera, to me, it seems like the geopolitical situation is a lot clearer than it was about 2 months ago, 3 months ago. So I don't really believe that that's going to be a factor anymore. So to me, the metals have been kind of running on empty for a while. But frankly, I could probably say the same about Bitcoin, but we'll get to that later. So that's what I think about it.
You can always say that about Bitcoin, right? There's no there at the end of the day, but as long as someone's willing to pay $100,000+ for one, you got a market for it. But yeah, it's interesting. That's something we've been speculating about a lot, Brett, is just, has the bloom finally come off the rose for the metals? They had quite a run this year. Post-election, as you pointed out, not so much, especially post-election. If you had to say which one would you rather have, crypto or precious metals, you're going to choose crypto all day long. So it sounds like you're a believer then that maybe that bloom is finally coming off the rose for the shiny stuff, sir.
Yeah, and in just to be completely candid, I've never been really a super fan of the metals rally to begin with. I never really understood why these things were rallying the way they were. Central bank demand, et cetera, et cetera, et cetera. But that's always been present. So all the factors that were being trotted out as to why the metals were coming up were present for years. So I never really understood, the whole mania for gold and silver. I think, as I explained last show, that it's probably because I've never been very early in my career, I made an extremely bad silver trade, and it kind of colored me for the rest of my life. So,
once burned, twice reluctant. That's the old saying, right? For traders out there.
Almost like a PTSD thing with metals.
I think we all have those products where you get burned once and I'm good.
Yeah.
I'm good with this one for a while. Sounds like the shiny stuff is that for you. Let's see what's going on out here in the shiny stuff this week, listeners. We'll start in the big dog, which is gold. I know we have silver on our movers and shakers this week, so we'll get there as well. But in general, it's been a wild week for metals across the board, as indicated by the CVOL out there. Just the only vol loser out here this week. Was it a hot week for gold? I'd say it's about what we'd expect. 258,000 contracts on the tape. Right around 250,000 is about what we'd expect this time in the week for metals. So again, you wouldn't know it was a Fed week by looking at the numbers out here. And in terms of action, 38% of that going up in the Jan contract that goes away in about 7 days. So a lot of near-dated paper, which is also not the norm for gold. If you've listened to this show for a while, you know the precious metals, usually it's longer term and upside driven. Lately, we talked about maybe some signs of some of that bloom coming off the rose in the metals skew. We talked about that last week. It was one of the first times in a long time we've seen puts catching a bid out there in the shiny stuff. Let's see if that is the case again this week. We're hanging out right now 26.13 in that Jan future, listeners. That's off 2.34% this week. I mean, it would have usually on most weeks would have made our bottom five. It just was a very dark side heavy week. Took a lot to crack into the top five this week, listeners. But gold certainly feeling its pain this week. Vol wise, gold actually ticking up a little bit this week, which is kind of interesting. Well, you know, it's kind of a tale of two tapes out here. Near dated vol ticking up, which is where a lot of the paper went up this week. 1381 right now, up about 0.4, nearly half a point. You go out a little bit longer term, and remember, CVOL is about a 30-day measure, listeners. That vol has come off a little bit as well. That's one of the reasons why. Maybe if you're seeing this vol, you're a little bit confused while the CME CVOL is coming in. That's why. But let's go out to the skew. Is it the same deal this week, listeners? Last week, nobody wanted the calls. They were 6.2% cheap. That is wild in gold. We very rarely see that. This week, that discount to the calls is mostly gone. They're kind of flat again. 0.6% bid. So slightly bid, I would call that flat. And then the puts last week were 7% bid. So the puts were looking for a little bit more downside. That bid is now gone as well. They are 0.2% bid. So both the calls and the puts are where I would put them as flat right now. So maybe we're settling out right here right now, finding a little bit of equilibrium here. Certainly not seeing a wild bid to the puts. Now we'll go a little bit farther out in a second and see if that is the case a little bit longer term, because typically in the shiny stuff, the story is being told in the longer term contracts. But right now, the big dog, like we said, 39, almost 40% of the paper going up in Jan. It expires in about 7 days. So very near dated paper. Again, it is Fed week, so that makes some sense. And looks like it's the 25.5 puts. So about 63 handle out of the money puts going up quite a bit this week, nearly 8,000 times. The big day was actually kind of even all week long, about 22 to 2,500 all week long, opening for most days, with the exception of Monday, only a couple of hundred on Monday. Makes sense, people keeping their powder dry ahead of the Fed. About 2,100 today against an OI of 3,100, so 25 half put. I don't know, Brett, does that float your boat? A 63 handle out of the money put with about 7 days to go in gold right now? Is that an exciting trade to you?
To me, no. I think that there's more exciting trades out there, frankly, than playing around in that.
Yeah, that doesn't really float my boat either. But somebody had a good time. Somebody had a good time slinging these back and forth, mostly opening all week long. You like those, listeners? 25 half puts, 7 days to go. If that's the case, if you're buying those, then you're hoping gold gets its button gear to the red, because it's got to keep moving over the course of the next week. Given the fact that the skew has collapsed, we might assume some folks might be selling those, which case could be a little bit of some folks drawing a line in the sand there in gold and say, okay, 25 half. If it gets there over the next week, I'm going to buy some. 2,500 puts right behind it as well with 7,000 contracts. Now, before you say, oh, it must be verticals, not quite the case. Doesn't really line up one-to-one any day. The big day was 3,600 on Wednesday against 2,500 of the 25 half puts. So if they are verticals, they're going up on weird ratios, listeners. About 1,500 today, about 1,500 on Tuesday. OI right now, 9,500. So I don't know. If you're rolling, are you rolling from the 2,500s to the 25 halves? I don't know. It's a weird roll on the surface of it as well. So let's keep looking. Usually there's some weird stuff afoot a little bit farther afield here, listeners. And that is the case if we go a little bit longer term. If you want some of the more traditional, by the way, the skew, if we start going a little bit farther out, let's see, let's go out a whopping, go out to March of next year. It's got 70 days, listeners. Those calls are bid, but only slightly. They're about 4.9% bid now. The put's 2.4% cheap. So that is more of a traditional, what I would call precious metals type skew. So maybe be careful reading into all the skew of just those very near-dated options. They don't tell the entire story out here, but obviously not quite as aggressively bid as they used to be out here in the precious metal. Let's go pretty far out. Let's go all the way out to Jan of 2026. That is usually where the metals bulls tend to hang out, the gold bugs, if you will. And if you do that, you are starting to see some some shades of old school optimism. The calls were 11.4% bid last week. This week, 20.2% bid. So catching a firm bid, they have a whopping 368 days to go. So that's an eternity in the markets, let alone in metals. But so if you're looking for a little bit of upside demand for the metals, got to go out a ways, but there is some to be found. If we go a little bit closer to home, though, listeners, if we go to the 27 half calls, how does that float your boat? Out here in February of this year, they have about 40 days to go. They traded pretty actively this week to the tune of about 3,300. It's like 1,300 on Tuesday opening and 1,300 again on Wednesday closing. So maybe we had a very near-dated upside roll of the dice on the Fed. Somebody came in, loaded up on a bunch of 27 halves ahead of the Fed, and then when we didn't get the movement he needed, he got the heck out of Dodge. That'd be pretty near-dated paper, but if you're going to do that, you're probably better off getting a lot closer to the fire if that's what you're going to do. But if that's the case, he played in these and looks like it didn't work out. Got the heck out of Dodge. Only a couple hundred each trading the rest of the week. Total of 3,300 on the week, and the OI is 5,200. So 27 halves in February. Sounds like, Brett, given what you're thinking out here in the shiny stuff, that 27 halves in February not exactly exciting you out here as well, sir.
No, there's one factor that you didn't mention, which is a real possibility, which I haven't looked into, but it could actually be the case. And then that retail investors are fleeing gold and went into Bitcoin. It's a similar sort of mindset for retail investors when you're looking at gold and you're looking at Bitcoin. I look at the two markets and I'm a retail investor. I say Bitcoin's where the action is. I have limited capital. Let's liquidate whatever I got going in gold and silver, move into Bitcoin. So there could be that migration going on that's affecting both markets. I haven't researched this, but I bet you that's happening.
That certainly makes sense. I mean, they've called it digital gold forever, and now one is demonstrably outperforming the other. I know which one I'd rather have over the course of the last month in my back pocket.
I mean, it's kind of like a sector, where you're moving from one stock to another within a sector because one is outperforming the other, but it's essentially the same fundamental thesis. So why would I trade one versus the other? One is completely outperforming the other and has some serious juice behind it. And the other one is kind of, it's sleepy town. So that would be the logic behind mine.
I found one for you, Brad. I think you're going to like this one. Let's go out a little bit of a ways. Let's go out to October. Listeners, a whopping 280 days. That future out there is at a 27.06, if you're wondering. And looks like somebody put up 4,000 of the 1,900 puts. Yes, I said that, 1,900 puts, listeners. So 800 handle out of the money puts. They went up 4,000 times. All of that today, Brett. There is zero OI on this strike, so it all is opening right now. So somebody opening up a size position on the October 1,900 puts. Now, looking at this skew here, it's kind of hard to read into this, but that skew is getting a little bit more discounted right now. So there is the potential. We haven't seen a lot of this in the past, but there is the potential for someone, again, drawing that line in the sand at the 1,900 strike. I know if I had to choose my way, I probably would be the way I would go rather than buying these. But Mr. Brett, what are your thoughts on 1,900 puts in October, sir? Do those float your boat?
Yeah. You trade options long enough, there's always people doing crazy stuff. Buying very deep out of the money puts or calls, and they're just putting up, sort of a lottery ticket, sort of bet here. It's not that they know anything. It's not that they have unique information. It's just, it's extremely cheap, and in their mind, there's an incredible return on it. I don't personally, I always hear about these things, and I never really give much credence to it. Just because they're buying a lottery ticket, they don't necessarily know anything. To me, you get a better return, go into like one of the predictive markets, and, but make a yes/no bet on gold, and you get a much better rate of return, albeit you don't have any liquidity. But personally, I always, I would be selling them. And, and the other misnomer is I'm not holding these things till expiration. Sell them, hold them, keep them on the book for a couple months, get the decay and, buy them back. I'm not holding these things for a year, that's for sure. So.
It is interesting. I can probably count on one hand the number of times, we've been doing this show for a long time, the number of times we've talked about sizable put activity in the metals. It's not very frequent. So that in and of itself is kind of worthy of note, let alone that far out of the money. And the fact that the skew is maybe shifting a little bit. All those things, certainly if you're a gold bug right now, might be enough to make you say, and at least stroke your chin out there. Since we're talking metals and shiny stuff, let's look really quickly at silver, because silver is indeed dominating our dark side. It is the number one percentage mover at CME this week, off 7.12%. So silver taking it on the chin, 29.5, and that front future off $1.51 or nearly 5% just this week. So obviously feeling it this week, but off over 7% since our show last week. Weirdly enough, not the most active of weeks for silver. Only about 38,000 contracts on the tape. We've seen it do easily twice that in the past. So kind of weird stuff out here in silver. I just want to profile, looks like a couple of interesting trades out here going out to February, about 40 days to go. It was the 29 puts. Remember I said we're at 29.5. They went up about 1,000 times this week, so that was obviously the big dog, including 621 today. It's like a 29-28 put spread going up, a vertical, about 600 times just today in silver, listeners. That's accounting for a little over 1,200 contracts right there. So it's like maybe you have a bit of a roll because there are about 800 open and not many open on the 28 puts. So taking those 29 puts in February, rolling them down to the 28s, certainly makes a heck of a lot of sense. Brett, I know you're watching a lot of metals. Do you watch a lot of silver out there, sir?
Quite honestly, not. Silver is kind of gold on steroids most of the time, complete with intraday market action that'll rip your face off if you're not careful. Silver is scary stuff. It always has been, just because the intraday volatility is much higher than that of gold. Gold is kind of sleepy during the day. It's kind of a misnomer that gold is incredibly volatile. It's not. If you want that sort of irrational action, you got to go into silver. And that's what silver always scared me for that reason. That I always got the feeling that there was something going on in the silver market that I just didn't understand or couldn't reveal. So that's why I'm always leery of silver for that reason. I don't get the feeling like when I go into the energy markets, I get the feeling of a deep, deep market with industrial demand and big, hedge players, et cetera, et cetera, et cetera. I never got that feeling in silver. I always got the feeling that I was playing in a pit where there were some insiders who knew everything, and I was not part of that frat party. So that's my condemnation of silver. Sorry.
We have a regular contributor on the show who likes himself some silver, and he puts it in similar terms to you. He says it comes like a thief in the night, just when you least expect it. And all of a sudden it comes and it's moving quite a bit. So
wife comes home from work and after 15 years of marriage and says she wants a divorce. It's like that.
Wow. I
thought everything was fine. It's like, what happened here? So, yeah.
Interesting. That's a whole new way to look at silver, listeners. But, we've been talking a lot about crypto. It is number 6 on our dark side this week, right outside our very hot bottom 5. So let's head over there next.
It's time to explore the volatile world of Bitcoin, Ether, and more. It's time to talk about crypto.
Let's dive into some crypto. Pop out of that metals asset class. You're going to go all the way up one from the top of our list to cryptocurrency. Then you're going to go product family indexes from there. Obviously, we're going to start in Bitcoin first. Looking a little bit lighter than it was even earlier this week. Listeners, of course, we broke through 100K again, got up to 107 roughly, I believe, in that range. Giving some of that back in the futures now as we came into the start of the show. They were at 96,835 out there. So giving up about 5,500 handles on the week, a little over 5.5% since our last show, off 1.84%. So not enough to break into our dark side. But Brett, I know when you're not popping up on this show, you're looking at a lot of crypto out there these days. You've mentioned it already in regard to gold. What is catching your eye out there in crypto these days?
Crypto is weird stuff, I have to tell you. There's several factors that make me look at this and wonder really what's going on. The first thing is this stuff trades in contango. Normally, commodity, if you want to call it a commodity, call it whatever you wish, there's no storage costs. I would think if I were a Martian who just landed on the planet and was looking at Bitcoin, there's a ton of retail participation, et cetera, et cetera. I would say this thing is probably going to be backwardated, but it's not. It's steeply contango. And the higher the stuff goes, the steeper that contango gets. So you could be saying that people have a lot of faith in this because they're buying the back dates over the front. I mean, since election day, like the front to back spread was trading about $200-300. Now it's trading, it got up to like $1,200. That's quite the move for a front to back spread in steep contango. And it gets steeper and steeper the higher it goes. The higher it goes. Lately, Bitcoin's been coming off the last day or two, and you're seeing that spread come in. So it's a little bit reverse from other commodities like crude oil, where when crude oil gets very bullish, you'll see it go backwardated. Or some other commodities are like that. Crypto does not do that. Now, whether that's due to lack of volume or who knows what, I don't know, but it trades in contango. The other thing that's really strange is that given what's been going on, volatility has done nothing in 20,000 feet. It's been trading in the mid 50s, more or less, high 50s since election day when it really took off. And not only that, the skew, the 0.5 to 0.2 delta, I mean, it gets out to about 7.5 percentage points, but nothing to write home about. So it's a very, people started calling me up when it went over 100K, like, is this a bubble forming? You have like MicroStrategy all over the news, et cetera, et cetera, et cetera. There's a lot of pilot fish that are surrounding the Bitcoin rally. That's not that leads you to think that possibly this is a bubble, but it's really not. If it were a bubble, I'd be seeing sharply increasing volatility. I'd be seeing the skews way high. I'd be seeing really high volume and open interest. And to me, it looks more like just an aggressive bull market than a bubble in training. And you're seeing a lot of it unraveling over the last day or so, mostly because I think just retail are heading to the exits. But as far as is this a bubble or something like that? I don't see really compelling evidence to say it is currently. But it's the volatility movement that really caught me off guard, that I thought volatility would be sharply higher, but it's not. I suspect if Bitcoin comes off hard, you'll be seeing vol increase. But so far, we're not seeing that. Strange commodity.
You are echoing my exact sentiments on my crypto rundown show for the last couple of weeks, because I thought the same thing. I thought once you're hitting these new historic highs, breaking these new levels, we know how Bitcoin has performed in the past, what the hodlers are up to out there. Usually that's reflected in the skew and certainly in the volatility. And yet when we ran the numbers week on week for that show, we almost had to make sure everything was working, because they were literally unchanged week on week. It was very strange. Not at all what anyone would expect out there. So I'm with you. Color me in the confused camp about Bitcoin vol right now as well. I expected a lot more movement going on out there than we actually saw. If you just ran the numbers show on show, you would never assume we were breaking new records or hitting all time. You thought nothing. You thought it would be a sleepy week in the middle of the dog days of summer and no one was around. That's what you would assume.
But given the sort of breathless press coverage, I mean, that's all you were reading about over the last week and a half or so, 2 weeks. Is Bitcoin is making new highs, et cetera, et cetera. But if you look at the daily changes, the percentage changes on a daily basis, because it's trading so high, the daily changes are not that great. Like 1.5%, 2%, 3%. It's behaving more like a sleepy meme stock than something that's really going to blow your doors off. But again, I agree with you. If I just looked at the press reports, I would have said this thing is probably trading in triple-digit volatility, not 55, 58%, something like that, which is, in my mind, it's a high volatility, but it's not like, I'm going to call people up about it.
No.
Strange commodity. It really is.
55.5 right now, going out 8 days in Bitcoin futures here. Yeah, you're right. And it's been that way for weeks. So very strange out here, listeners. You know what else is strange is that I don't know what it's going to take to really light up some volume here in these options over here on the futures. Another week where we set another price record here in Bitcoin. You think, okay, that's certainly going to do it. That's going to get us at least over 1,000 contracts in the big futures. Now, remember, these are 5x contracts, so the more expensive Bitcoin gets, the more challenging that becomes to come to grips with. But still, 841 contracts is all they could muster this week. The big dog this week, 68 of the 100,000 puts. These are in December, going away in 8 days, which They started opening up on Monday, bought more on Tuesday, and a whopping 3 lot on Wednesday. So seems like those are looking pretty good right now as a hedge because we are back below the 100K level. But out there, yeah, not a lot else really lighting up, unless you're really excited about a 24 lot of these 66,000 puts going up in February of this year, listeners, all opening. So, yeah, some weird stuff afoot out here. But again, not a lot of paper. If you look at the micros, which again is a much more retail-friendly product out here, listeners, same deal, about 630 contracts. So at this point, I don't know. We have added IBIT in the last month and change out here and the options on it, and that is lighting the world on fire. So people are clearly interested in trading Bitcoin options. There's just something, and people used to say it was the multiplier, but looking at the micro, that's not doing it either. So I don't know. It's an interesting thing. Brett, I'm curious from your perspective, why do you think the options on the Bitcoin futures themselves are just not lighting the world on fire? You think it's just really folks are just waiting for the spot, the futures? Like you mentioned, the futures do trade a little bit differently than you might expect. So maybe that's throwing some people off. You think that's what it is?
I think it's retail. Frankly, retail is uncomfortable. I mean, traditionally and historically, they've been kind of uncomfortable with futures when there's another product available. I mean, I traded crude oil for a long, long time. I can count on one hand the number of times a client, a retail client asked for futures. They were very leery about trading futures in general. There's always a core group of retail that trades retail. That trades futures and are particularly comfortable with them. But the vast majority of people out there who don't have a ton of experience with futures, and buy into this, am I going to get a delivery of X on my front lawn? They're leery of trading them. And if there's an ETF available out there, it's just much easier logistically for them to deal with it. And unfortunately, I think that's the case, even though I think, frankly, that the futures and the futures options product is a much more interesting product because of the way it's structured and things. But that's a hard sell with retail clients. It really is. And I think that's why IBIT is taking off versus the CME product, even though, again, I like the CME product. But, You're
the first person I heard it call IBIT. I like that, IBIT. But good stuff.
It brings back bad term paper memories of IBIT.
IBIT, exactly. My son's going through finals right now, so I feel that pain. But, it's interesting. Yes. Are you a big watcher on the crypto side outside of Bitcoin? Because one of the other narratives that's come up a lot is the relative underperformance of some other assets to, of course, Bitcoin and indeed Solana, like number 2 ETH, for example, which is also a listed future at CME, kind of been lagging the others. Any thoughts on that, sir?
Again, these are retail products, and I think that you're going to trade Bitcoin, and if you're going to trade crypto and you're not super familiar with it, you'll trade Bitcoin. You trade the leader in the sector. And someone asked me this on another show earlier in the week and about trading some of the other stuff. I said, you can trade any of these things you wish. The question is one of liquidity. When this stuff starts coming apart, you're going to get a bid offer spread that's gigantic, and you're not going to be able to get out, or you're going to be able to get out at a horrendous price. It's kind of like buying art or any of this other stuff. It's easy to get in, and it's a roach motel, and it's incredibly difficult to get out. So if you're just looking at it from a speculative angle and you're not planning on holding this thing for the rest of your life, you go for the thing with the most volume and the most liquidity and the most, choice of products, and that's Bitcoin. That's my opinion on that.
All right, Brett, we're coming up against it. We got time for one more product category. So what's floating your boat? You like ags? You like energy? Like something else? Where should we go next, sir?
I think that just looking at the charts, I haven't been super involved in these lately, but, the energy, crude and products, especially gasoline, looks incredibly heavy. Crude's been banging around in a trading range for a while, but it looks like it might be getting ready to puncture the bottom. And crude oil volatility goes berserk when it starts sliding.
All right, that it does. To the world of energy, then, listeners, we go.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, everybody, welcome to the world of energy. Go into that drop down, pop out of crypto, go down one slot to energy. Then we can kick things off. There's a variety of choices out here. We have crude oil, of course, nat gas, refined products like Brett was talking about. Looking at our light side this week, we have nat gas number 5 up 2.03%. And then, of course, the energy sector of the S&P continuing to take a beating out here, off 7.11%. Crude oil back below the 70 handle as well, 69.22 in WTI, off $1.60 or about 2.25%. So we'll probably hang our hats out there. In terms of paper, not the most explosive week for WTI. Usually we expect it 400, 450 this time of the week. Only 305. So I think it's fair to say energy wasn't on the radar for a lot of people this week. There was a lot of other things. Of course, we talked about the metals, we talked about equities, we've talked about rates. Those are all very much in the crosshairs. Even crypto during the Fed week. Energy, not so much. And I think that's probably playing into some of these light volume numbers. Of that, 37% going up in the February contract. That's about 27 days to go. We'll hang our hat out there. That future, again, at about 69.25. Brett, you were just talking earlier about geopolitical factors and there may be lack of impact on metals. That's another factor people have been looking at to maybe give a little bit of a lift potentially to the energy sector. Haven't seen it materialize yet. What's been catching your eye out there in the Texas tea this week, sir?
Well, let me talk about the geopolitics for a second. That's always trotted out as one of the reasons why the crude oil is going to rally. But the geopolitics have been much worse, and they've been present since October 7th, a year and a half ago. And yet, we haven't seen a significant rally or supply disruptions, for that matter, as a factor of that. So the market, when it comes to geopolitics, I think it's more in the press than it actually is in trading. It's one of those things that sounds great on paper, but when you look at the price action versus things that really happen in the versus geopolitical events, you don't really see a high correlation here. And to me, it's sort of like with the war in Ukraine with the ags. It's like, okay, prove it. We've done this exercise a couple times, and supply demand doesn't seem to be being impacted by this event. Again, it's another one of those things, just like Bitcoin. But if I had read, 2 months after October 7th, with Iran and everything, what was going on in the world, and I hadn't seen a price, I'd say, yeah, crude's probably trading around $130, and people are really crazy about this. But they completely discount it because the supply disruptions just don't seem to ever materialize in any significant fashion. Interestingly, so that's why, and if they really want to search for fundamentals, then they start bringing up Chinese demand as to whether China's economy is actually going to recover or not. But to me, the bottom line is at the end of the day, I always come to the same conclusion. This thing looks heavy as lead. And, the press is constantly, or participants are constantly coming up with these sort of like fake excuses as to why it should be more bullish than it actually is. But, if I were along this thing, I'd be having this creepy feeling that I know this trade is wrong. And every day it doesn't really make any money. And I'm not sure what to do with it, but I guess I'll hang on, hoping that something happens. Natural gas is to me is slightly more interesting because what that's reacting to, I think, is what's going on in Europe with possibly a fairly tight supply-demand situation in natural gas going into the winter or in the winter, which hasn't really materialized yet, but they're worried about it. And natural gas, make LNG. And LNG is suddenly an international commodity that they're possibly ship to Europe to alleviate the supply situation. That's one of the things underpinning natural gas, which you're not getting in crude or products. And again, if you look at the natural gas chart, it just looks very heavy. It really does. Gasoline is what I meant to say. Sorry. A gasoline chart looks extremely heavy. I'm not particularly bullish on energy.
Brett, I wish you would tell us how you really feel about some of these products. You're holding back and you're keeping the listeners in suspense out here. But yeah, you're right. The geopolitical factors have not really amounted to anything in at least in the last few months out here in crude oil in particular. Looking right now, listeners, like I said, about 37% of what volume there is going up in the February contract. What is the vol? You might be asking yourself. So yeah, the vol here at about 25 and a half, actually 25.40, off about 2.9 points. So vol coming in again this week, which again, if we go back out to look at our CVOL for this week, it's kind of interesting because the energy aggregate CVOL is pinning the needle to the upside this week. So obviously they are finding their sources of volatility elsewhere in the energy complex right now. In terms of skew, not a huge evolution with the exception of the puts. The puts last week were 3.1% bid. This week, they're about 1% discounted, so swinging in the other direction. The call is going from about 1% cheap to 1.7% bid, so maybe we're starting to find that level. We'll see. But right now, the big dog here, though, were the 73 calls in February. So these have about 27 days to go. They went up about almost exactly 6,000 times this week, listeners. So that's an interesting choice. Feb 73 is, like we said, that future 69 and a quarter. They traded 3,000 of them today against an OI of 4,500. Looks like 2,100 of the 75s going up today as well. So it could be some vertical action. Total, they traded similar amounts, which is weird. 5,900 of the 73s of this week, 5,500 of the 75s this week, and 5,100 of the 80s. But none of it lines up. There's not much vertical action that we could see. 1,200 of the 73s traded on Monday, mostly closing there. About 1,100 on Tuesday opening and 600 on Wednesday also opening. And then the 75s doing about 5,500 contracts this week, the big day. Today, 2,100 against an OI of about 7,000. And then about 1,100 on Wednesday, slightly closing there. 1,800 on Monday, slightly opening. But if they're closing 73s on Monday, are you going to roll up to the 75s now? Seems like an odd choice if that was the case. So got some weird paper going on out here, listeners, and about 5,100 of the 80s. So if the 73s and the 75s don't do it for you, listeners, how about the 80s going up about 5,100 times this week? 2,100 of that on Monday, mostly opening. 1,500 yesterday, again opening. Only about 800 today against an OI of 17,000. So there's some size OI left on this strike. So some folks are holding on to these. Maybe they might want to start making some plans. Brett, I'm given what you said recently about how if you were long crude oil right now, you'd have this weird sinking feeling in the bottom of your stomach. I got a feeling none of these calls, 73s, 75s, or 80s in February, are going to excite you, especially from the long side. Maybe you want to sell some of these instead?
I mean, from a directional standpoint, they don't do much for me. From a volatility standpoint, maybe. I just don't. Yeah, they don't turn me on one way or the other. Honestly, we have volatility is going to. I mean, if what happens, if what I think happens actually happens, which doesn't happen that often, but still, if that's true, then when crude comes off, volatility increases. Just average volatility increases and skews increase. So to me, that's the opportunity, because when it starts sliding, crude really, when it starts sliding, it really slides, and you see volatility really spike. Because I think we mentioned last time I was on the show, every commodity, every product has a scary side and a not scary side. The scary that the market imputes. In crude oil, the scary side is always the downside. The non-scary side is the upside. See, when crude rallies, you tend to see volatility come in unless it goes completely berserk. But when it starts coming off, everyone starts talking about, we once had negative crude prices. They trot that out as proof, and yeah, you'll see volatility really increase. So to me, I would be waiting for that, or setting up for some event like that to occur, where you get this sort of outsized return, not just usual stuff. It has real potential.
All right, Brett, unfortunately, that music means there's no more potential, at least for time, left in the show. Did you have fun, Brett, joining us again on the TWIFO this time?
Absolutely. Invite me again.
Well, Brett, before we go, sir, if folks are intrigued, they want to check out some of your analytics for themselves, where should they go? What should they do?
They should go to OptionsMetrics, which is OptionMetrics.com, which is, by the way, where I get all my data from, the best source of implied volatility, or OptionStrat, which is its sister trading platform, or trading analytics platform, rather. So
there you go, listeners. Check them out if you want more insight in some of these products we talked about today, like crypto or energy or maybe some other products we didn't get a chance to squeeze onto the show today. And if you want to check out all these products for yourselves, you know where to go, cmegroup.com/TWIFO, TWIFO. Once you're there, sign up for the account. Takes 2 seconds. And once you have that, you have access not just to our reports, but everything they have cooking over there at CME. You can mess around with the CVOL dashboard. Take a look at the Fed Watch. It's been a hot one of late. So many tools over there. cmegroup.com/TWIFO, though, is the place to go to begin your journey. That's going to do it for us on the network today. Back again tomorrow with a little bit of vol talk on volatility views. Man, that one, stay tuned for that one. Should be a bit of a banger. A lot going on the vol front this week, courtesy of Mr. Powell and company. Then we're back one final time exclusively for you pro folks, hanging out in the live with a little bit of the old OptionsInsider.com/pro. That's the place to go to get access to all that fun options oddities coming up after vol views tomorrow. Then, of course, we're back again. Actually, not next week. I do think we'll be off next week because it is the day after Christmas. So we'll see you back here in 2 weeks with some year-end spectaculars on TWIFO. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.